So hi everyone. I think hope you can hear me.
We can.
Yes, we can. Yeah.
Jonathan, is it fine with you? Sure.
All good. All good.
Yeah, it's fine.
Okay. So welcome everyone on the IFS Saudi Arabia CPD webinar. And I believe everyone would have turned off their mic. Whenever you have any question, you can raise your hand, or you can post a question to me so that I'll open the mic for you. So as you know, we are always trying to commit and have some CPD webinars for our members and non-members. So this time we brought Mr. Asher Salim. He will talk about some stock market related stuff. I'll have a detailed intro of himself later. Uh, in the start, we have with us Mr. Jonathan. He's Business Development Director of IFA. He will give you a little bit brief about our upcoming webinars as well as the IFA, a little intro for recap for the members and non-members on IFA side. So over to you, Jonathan. Yeah.
Sulman, thank you. Good afternoon, good evening to everybody from wherever you are joining us. I do hope you're keeping well in these times that still do remain uncertain around the world. It's a pleasure to join you this afternoon, this evening, and many thanks to members and non-members for taking the time to join us and invest in your continuing professional development. For the non-members joining us, can I just take a couple of minutes to talk about the Institute of Financial Accountants? The Institute of Financial Accountants are an internationally recognised professional accountancy membership body. We support over 42,000 members and students around the world. And we very much as an institute look to support and focus accounting, audit and finance professionals that are working within an SME sized organisation, so a small or medium sized organisation enterprise, or those individuals working within smaller to medium sized accountancy practices who are providing services, whether that be audit, accountancy, taxation, corporate finance, to corporations, to industry, to business. The Institute of Financial Accountants are full members of IFAC, the International Federation of Accountants. IFAC are the global standard bearers and regulators of the accountancy profession. Our full membership of that body provides not only us with international recognition, but it provides our members with local and international recognition. It also allows portability of that membership. The Institute of Financial Accountants are also part of the largest SME-focused accountancy group globally. We support members and accounting students currently across and in 80 plus countries. So just a little bit of background about the Institute. For those of you who aren't members and may be interested in becoming a member, can I suggest that any inquiries, queries with regards to membership are directed to Sulman. But membership is achieved by meeting two criteria. The first is about education and prior learning. That is either the completion of our education program, a program made up of 14 units, or it is about the Institute recognising your prior professional and academic learning that is of a commensurate standard and level. The second criteria that needs meeting is experience. Somebody must have no less than 3 years relevant accountancy, finance, audit experience to be eligible for full membership. Both membership criteria must be met. If I move on, Sulman has already mentioned that part of the Institute's, I believe, obligation, our commitment to members, is to provide continual professional development programs. We look forward to the talk later on from our guest speaker, and I thank him again on behalf of the Institute for attending and giving us his time. I would also like everybody to please put a date in your diary for 2-3 weeks' time. The next Saudi Arabian-led CPD webinar is on the 4th of June. It's looking at global interest rates and the FX outlook. That particular webinar will start at 2 p.m. local Saudi time. For anybody joining outside of Saudi Arabia, please do factor in the time difference. You can register by going onto the Institute website, and members over the next week will receive a reminder about registering for that particular webinar. However, we don't just put on local CPD. I would strongly advise members and non-members to visit the Institute website to see what other relevant finance, accounting, business matters are being covered, all through webinar at the moment, so easily accessible. We have 2 UK branch events coming up on the 26th of May and the 9th of June. We have an interesting webinar next Thursday, which is about well, funding and the lending landscape and how that's changing because of the COVID pandemic. And another hopefully relevant webinar that I wanted to draw to your attention is taking place on the 23rd of June. And that's looking at how trends in cybersecurity are and will impact accountants. So just 4 other webinars to draw to your attention. Do visit the Institute website, www.ifa.org.uk/CPD. The Institute, though, are also putting on an international virtual conference on the 25th of November this year. That will be a full day of CPD. There will be 6 different subject matters covered, 6 different speakers, hosted by the Institute's CEO, Mr. John Edwards, myself, and one of the IFA board members. Details of the virtual international conference will start to filter out to members and non-members through a variety of channels in the month ahead. But I just wanted to draw to everybody's attention the virtual conference later on this year. Again, doesn't matter where you are in the world, through the internet makes ease of accessibility incredibly straightforward for people. The last thing I want to mention is just a housekeeping point. I hope we run through the rest of today's session with ease, that we have no technical issues, and if there are any, please bear with us because we will look to resolve those as quickly and as efficiently as possible. We welcome your questions, and there are 2 ways of doing that because we're using a Zoom webinar platform this afternoon, not a Zoom meeting platform. The Zoom webinar platform, please use the Q&A or the chat facility, either at the bottom or the top of your screen, to ask your questions. Mr. Sulman is your administrator. He will log those questions, he will deal with those questions, and he will ask our guest speaker at an appropriate time those questions. So please use either the Q&A or the chat facility. Again, thank you for joining the Institute. It's a pleasure to be with you. I hope you find the talk of value and of interest. Thank you for joining, and thank you again to our guest speaker. Mr. Sulman, back over to you. Thank you all very much indeed.
Yeah, thank you so much, Jonathan, for your profound words, and you speak about the IFA and upcoming webinars. So now let me introduce our speaker guest, Mr. Ashar Salim. As you know, today's topic is the importance of disciplined exposure to the capital markets for retail investors. So regarding Mr. Ashar Salim, he is a CFA, and he has been with the investment management industry for more than 5 years, particularly in Saudi Arabia, as well as he has an exposure of other markets like Pakistan, as well as other GCC country markets. His main exposure is basically revolving around managing the portfolio in the stock exchange, private equity, fixed income, and money market products. He is currently working with the Falcom Financial Services. He is the part of asset management team and managing the assets exceeding more than $500 million US, which is basically spread across the multiple asset classes. Previously, Mr. Ashar Salim is a part of Saudi Kuwait Finance House and Rashid Saad Al Rashid Investment Department. He has also been selected as a and served as a judge and industry mentor in CFA Global Research Challenges Saudi chapter from different periods like from 2019 to 2021. Furthermore, he is also the board member of Advisory Board of University of Business and Technology, Saudi Arabia. He's regularly been invited by different universities, including Prince Sultan University, to deliver the speaker sessions on various industry topics relating to this finance and capital markets. Over to you, Asher.
Hi. Thank you so much, Salman and John, for the introduction. Obviously, it's a pleasure to be in here. I think it's an honor to be a part of this institute. Just let me share the screen first. Okay. Yeah. First of all, obviously, it's great to be present here before all of you. I mean, we have a very good lineup of attendees for sure. Highly qualified, very diligent people. Before I start, I would like to give two disclaimers. Number one, the slides are pretty ugly. I'm not very fond of very fancy or very pretty slides. So please bear with me. I've tried to focus more on the content and what I'm about to say. And secondly, before I start, I think it's a very important disclaimer that the content of today's presentation and my session is by no means can be considered an investment advice. It's basically for educational purposes only. So any decision based on this would definitely cannot be hold accountable for any of the participants of this group. Anyways, today what we basically why we have this session is because Salman has been telling me how the institute has been arranging a lot of webinars and a lot of sessions, but they wanted to have something of a different kind of exposure with respect to in terms of the technical knowledge over there, because most of it's related to finance or accounting concepts. So I thought this could be an exciting thing for them. So that's why I said, yes, fine, it sounds interesting, and be more than honored to be a part of this. So the topic that we have basically tried to speak about is the importance of disciplined exposure to capital market for retail investors. Now, before we dive in deeper, I would like to give a brief introduction of myself. Salman has been kind enough for that already. I'm Asher Salim. I was born and raised in Saudi Arabia, so I'm basically a local without a passport. I've been here for more than 30 years now. I'm a CFA charter holder as far as my qualifications are concerned. I have an MBA in Banking and Finance from the Lahore School of Economics. And then I have a bachelor's in Economics and Finance from the Lahore School of Economics again. Basically, obviously, I'm from Pakistan, but I've been born and raised here. So I've spent more time in Saudi than I've spent in any other place in the world. Professionally, I'm currently working at Falcon Financial Services. I'm the part of the asset management team. We're a multi-asset manager. We deal with public funds, portfolios, and institutional clients. The kind of asset classes that we deal in is mainly equities, fixed income, money market, and private equity, real estate as well. Assets that we are managing right now is north of 500 million USD. Previously, I was a part of the Saudi Kuwaiti Finance House in a similar role. And prior to that, I was with Rashid Saad and Rashid and Sons, looking after the investments of the family and the private equity portfolio for the company overall. On the sides, I like to call myself a hustler. What I do on the side is basically, I believe that I've always been very much linked to the youth and to the people who are coming up in the industry who wanted to have some sort of guidance or mentorship. So I've always been very active when it comes to advising young people, whether that be about career, about CFA, about investment. So I try to do as much as I can for the people, because if I look back at my career 10 years prior to now, I would want someone to tell me what to do. So I try to do that. That's my way of giving back to the society. I call it my professional charity. And Alhamdulillah, it has played out very well for me. I think the universe is arranged such that there's always you get something out of it if you do it out of good faith. I'm part of the University of Business and Technology right now as a board member in the advisory board. Other than that, I've been very much active with the CFA Saudi Society Saudi. I was the industry mentor for the UBT, for the Global Research Challenge for the Saudi chapter. And the year prior to that, I was the judge for the Global Research Challenge against the Saudi chapter. So it's been pretty interesting. And before I get deeper into investments and how we should start investing, I would like to tell you a very small story, the story that I call as my $3 story. Now, I've been in the industry for more than 7 years, and Alhamdulillah, thanks to God, I've been able to achieve a lot of the things. But the start has not always been the same. Why I call it $3 story is I remember back in my second year in university is when I basically started investing. Uh, I'm not from a very wealthy background, but I'm not a very worse off as well. So, but I was studying at that time, I was second year in university, and I had this charm of starting to invest because you see the news, you see people making a lot of money in the equities, and then they talk about it, looks so fancy, and you are an outsider. So what happened is I started my first account. I still remember it was United Bank Limited, UBL. It's a mutual fund investment manager over there. And I opened my first account. It was with 500 rupees. Now, if I translate that to USD, it's basically $3.5 to $4. So the poor guy, I still remember the guy, his name was Shahid Diyar, and now he's the head over there, pretty decent guy. He came, drove to my house, and he signed the form. And when I subscribed, I gave him a check of 500 rupees. So the guy probably spent more than 200, 250 rupees on fuel only. So it's really bad. But what happened is that 1 year after that, I started making, let's say, 16 to 18% on my portfolio of 500 rupees. So that's what, less than 100 rupees, right? Nothing. But what happened is I kept reading their reports and I started getting a hang of how things are being done. I tried to see the trends and I tried to see how they pick value from the market, which I'm not able to pick. After 1 year, I started trading on my own, and then I started my first equity portfolio with 5,000 rupees, which again, less than $100, I guess. So that's how I started. But Alhamdulillah, after that, things started to pick up. I started to learn how to do it. And then my qualification helped me in that as well. So Alhamdulillah, from that to now, it's been a very good ride. The entire point of telling the story is basically starting small. You should never be ashamed of that. I'm never ashamed of the fact that I started with $3, or I'm never ashamed of the fact that I started my equity portfolio with, let's say, $100. The point is I started learning at that time, and that's my goal for today's session as well. Now, for today's session, my target audience is, apologies to anyone who is already an expert in terms of investments. They might find me boring, or they might have a lot to correct me upon. But my target audience, very blatantly, is every person who is planning to grow their wealth in a disciplined manner. I mean, that's the very basic. Any person who has medium to low exposure to capital markets is my target audience. I've been a proponent, I've been like a free marketing tool for the equity and the capital market since like last 10 years, because I keep annoying my friends, my relatives, my colleagues, everyone, about how capital markets can be a very good tool for them rather than their enemy, because that's the common conception in a lot of people. Now, what would you learn from this presentation? If you are an expert, probably you'd learn nothing other than my small story that I just told you. Other than that, anyone who is not exposed to the capital markets would learn how they can plan and invest at a very early age. I say investing at 18 years old is still possible. You can invest anytime. It's never late. I would like to emphasize a lot on the fact that your focus should be long term. I always try to instigate this in anyone that I speak to, that investments is not about hit and run. You don't want to gamble. You don't want to play in the markets just for a couple of days. I want you to have a long term focus. I want you to build your net worth. I don't want you to make money overnight and then just exit and try to party. That's not the way how investments, that's trading, but that's not investing. Now, why investment income is important? I would not like to go into the numbers of why people who are rich right now at the top end of the spectrum are rich, because obviously they took some risks, they developed some products which were saving lives, which were saving a lot of time, and that's why they are there. But the main point is they invested something. They invested in their skills, invested their money, managed their portfolio in the most optimum manner. That's why they are where they are right now. So I always feel that whether you are a salaried person or you have a small business, your regular income can always become a source of funding for your investment portfolio. So if you do that gradually, and if you do that in a disciplined and long-term manner, you'll be surprised with what happens in 10 years down the lane. Lastly, you don't have to be an expert to invest decent returns, and I would go into that. Before I go into all of that, I'll just skim through what the presentation will be covering. We'll have the process, how the investment process is structured, what's the investment avenues that you have, the common misconceptions, how the different asset classes have behaved in the last 10 years. Now, my focus is 10 years because we're talking about long term. And then I would like to tell you, how can you value a company? Very basic concepts, and then I would like to shed a little bit of light on how much money would have you made if you were in the US markets, in the Pakistani markets, the Saudi markets, and if you had a portfolio overall. Then I would dive in a little bit into allocations, how you can basically alter your weights for country allocation, for your stock allocations, and how basically you can achieve your goals, which I'm talking about. Now, because the investment universe is a sea. I mean, I could go on for 5 days consecutively and I could still not finish all of it. So what happens is that I'm trying to limit my scope mainly to equities and mutual funds, and the markets that I'm trying to expose, because if I'm not mistaken, most of my target audience right now is Saudi, Pakistan, and probably someone who has exposure to the US. So I'm limiting my exposure to the US markets, Saudi markets, and the Pakistani markets. Now, if we talk about investments, I mean, there are very fancy terms. I always blame my colleagues and a lot of people in the investment industry because they try to assign very sexy names to very simple processes. They call the IPS, the investment process, and the due diligence and all that. Words that basically try to make you stand out. It's a very simple thing if you know about it. Now, how the investment process basically operates. When I'm a fund manager, I'm an investment manager, what I do is, and now you people right now are like investment managers of your own. You're managing your own money, okay? How do you start your investment process? The first thing that you start is basically the return requirements. Now, your return requirements can be guided by a lot of things. Once again, our focus is retail investors. You are managing your money, so we are going through that. Now, your goal could be, I want to have, let's say, a house in 10 years. I want to have a vacation trip in 3 years, or I have to get my children married, let's say, after 15 years, or I need to have an XYZ degree in, let's say, 10 years. So you need to start saving for that. So that is your goal. You have a fixed amount of money right now. You do the maths, you know how much return that you need. So once you know the return requirement, let's say your return requirement is, let's say, 0.5% or 1% per year, you go to the most safest investments that give you less than 1%, right? But if your goals are quite ambitious and you want to build your wealth, let's say at 10-15% at an annual rate, you go towards equities, private equity, or a portion of real estate as well. After you've assigned your return requirements, then you try to see what are your risk constraints. I mean, okay, let's say I'm a father and I have a wife and I have 3 children. So obviously I have a lot of responsibilities. The risk of me not having enough to serve for my family is pretty huge, right? So I need to make sure that my downside should be limited, that I do not have to forego my basic expenditures. So that's basically how your risk constraint comes in. The investment bankers will tell that to you in terms of value at risk or probably standard deviation, or the downside is as simple as that. Your downside is the minimum amount of money that you need to put bread on the table. That's it. You have a house, you have food to eat, that's your bare minimum. So any income below that is basically where you will not survive. So that's your risk constraint. Now, special considerations. We have a lot of investors over here and even globally who have specific restrictions for Sharia or non-Sharia. Sharia is basically the Islamic mode of investments, or any product which is Sharia compliant is basically an accepted Islamic tool or vehicle for investment. Now, I would not go into in depth of how a Sharia or non-Sharia investment is categorized, because there have been a lot of gray areas, a lot of areas where a lot of us would not agree. So let's try to ignore that for now. We, as of now, we are accepting the standard Sharia procedures which the S&P follows. We have a very public document available on their website, which gives you the calculation methodologies, the ratios. Some people might agree, some people might not agree. So we'll try to keep it simple in here. The next is the liquidity requirement. Now the duration. Now your investment could be something that you don't need right now, let's say in 3 years or 5 years, or you need it, let's say after 10 years. Or it could be that your income currently is not sufficient and you need, let's say, a small income on the side so that you have a better lifestyle than you have right now. So you plan your investments in such a way that you get something out of it every month or every quarter, which can assist you to do your regular expenses. Nothing wrong with that. But this should be decided by you before you enter an asset class. Just to give you an example, you enter a private equity fund, which is going to exit after 10 years. But your liquidity requirement tells you that 1 year down the lane, you need a huge chunk of money. Very bad decision. You're just stuck in there. What you'll do is you'll try to exit your fund after 1 year at a very unfavorable rate, which is going to basically ultimately harm your overall portfolio's return. Once you've decided your duration and your liquidity requirements, then you move on to the asset class selection. Now, the asset classes, as I said, it's a big sea of investments. The market is full of products ranging from equities, fixed income, money market, structured products, derivatives. I would not call cryptocurrency as an asset class as of now. It's a speculative tool. It has some value, but it's right now, it's not an asset class as per my definition. Some people would find it as an asset class, but it is making money for a lot of people. Anyways, so asset class selection is done. Now, how do you decide your asset class? You're sitting in, let's say, Saudi Arabia. You're basically from Pakistan. You probably want to have exposure to the real estate. So you have to go to Pakistan, talk to a broker, buy a real estate, make sure someone takes care of that property, and then you come back and then you try to monitor it. Ideally for you, what's easier is that you have an asset close to you physically. And honestly, this is a very important consideration when you work with a lot of family offices in here as well, even at institutional level. Proximity is one of the key determinants of decision making for the asset class almost across the board. Next is the execution. It has to be a reliable or a trustable path. I want to, let's say, I need to buy stocks. Okay, let's say I need to buy Raji Bank stock. How do I buy it? I can go directly to the broker and then I say, open my trading account and I buy. Or I tell my friend that, listen, I'm giving you money on a personal capacity, buy Raji Bank for me. So these are two paths. You need to pick up the reliable paths where your ownership rights are guaranteed and where the process is pretty smooth. Nowadays, we have a lot of products, so you have a lot of reliable paths. Then you try to find the paths which have the lowest cost. Do I trade through, if I'm dealing with the US markets, do I go through Diraya and I pay $2 a trade, or do I go through Interactive Brokers and pay $1 a trade? So you need to try to assign your cost optimization over there as well. The same is the case with real estate brokers. Do you go through a big broker or you go through smaller brokers, and how do you want to take that? So it's basically a mixture of all of that. Once you have executed your investment, then it's about monitoring and rebalancing it. If it's an equity portfolio, you look at it almost every day, but you rebalance it, let's say, quarterly. I do not encourage traders or day traders. I always encourage long-term value investors. If you have a real estate, then you have, let's say, a 2 to 3 year time horizon. You go back to Pakistan, you see your property, you see, okay, can I get more out of this, or should I sell this and buy something else? When you are making that decision, you basically are an investment manager. Now, as we just discussed, the investment avenues that we have available are ranging from equities, fixed income, money market, real estate, private equity, which is direct investments. I put my money in a private company. My cousin runs a company and I buy a stake of that. That's private equity. Or commodities. You can trade in gold, oil, corn, cocoa, wheat, XYZ products. And then for all of this, you have a lot of mutual funds or ETFs. Now, I have highlighted equities and I've highlighted mutual funds because that's going to be our core focus for today. Now, mutual funds have been a very exciting tool. if we have some people from India, I think it's a very remarkable thing that we need to highlight, that India has a campaign which goes on as it's run from the central bank, which says mutual fund sahi hai. In Hindi, in English, it means mutual funds are right. What they're trying to do is they're trying to encourage their people to go into mutual funds, because mutual funds are for people who do not have a lot of money. They basically pool in their investments into a fund, and then that fund manages an asset class. It could be equities. So in equity mutual fund, what would happen is that, let's say XYZ investment bank operates a mutual fund. It collects money from 100 investors, and then it starts managing it with an expert team. So instead of you going directly to the markets, you are going through mutual funds. If you go through a reliable asset manager, your money is as secure as you're placing it in a bank in terms of operational security. I'm not saying that you won't have a loss. Even they have losses. For mutual funds, you have very large variety of mutual funds or funds that you have right now. Fixed income, sovereign. Now, I always see people. I know that we have a lot of Pakistanis here, and they like a lot of politics. So they like to see it on news, and they say that, okay, let's say our prime minister has just issued government security yielding 6.5% on the dollar. It's a very amazing rate, by the way. How do I buy it? Now, you cannot go and do the auction at the State Bank of Pakistan. How do you enter that? You buy a mutual fund, which ultimately buys sovereign sukuk or sovereign notes. So that's basically how you take your exposure. You could not have done it on your own. That's what mutual funds have enabled you to. Real estate as well. Now, if let's say the Kingdom Tower, by the way, it's not a part of REIT as of now, and I don't intend to say that it's going to be a part of any REIT as of now, but if you want to buy the Kingdom Tower, it's one of the prime buildings in Saudi Arabia, in Riyadh for that matter. You see that all over the pictures. You cannot buy it alone, okay, unless you are a prince or a very wealthy person. You cannot buy the Kingdom Tower. But if that Kingdom Tower was a part of a real estate investment trust or a fund, so you could have a share of that. So basically, you're realizing the returns of the Kingdom Tower, but you don't have to bring in the multi-billion reals to buy that asset altogether. That's what mutual funds have done for you. Last is commodities. Now, I know I've been raised up in a Pakistani family, so I see the importance of commodities. By commodities, the first thing that comes to our mind is gold. So I've seen my family hoarding gold all year long, and just at the end of Ramadan, they feel like, okay, they had a lot because they had to pay a lot of zakat on that. But they still find holding gold as one of the safest asset class to invest in. We would definitely go into the numbers of why is it an asset class, and I mean, is it actually yielding you that much, or is it just sorry? Okay. So now for gold as well, we have a lot of equity funds. Now, as of now, I will not name any specific fund or company because I'm not marketing for any company, but anyone can contact me personally to get the list of funds that we have available in Saudi, in Pakistan, and in the US, which deal in commodities. So what they do is you will pool money from investors, and then you start investing in gold. So you don't have to hold gold as physically in your house in the form of bricks. Rather, you take the exposure through a fund, and the returns are the same net of the small fees that the investment manager charges. Okay, now what's wrong with the screen? I hate this. Okay, now the most common misconceptions and biases. As I always said, the focus is real estate investors, people who are not seasoned. Real estate is always the best investment. I'll go on the numbers and I'll tell you that from a return perspective, is it the best investment or no? Second is gold is the second best investment. Again, a very Pakistani, a very Indian, a very Chinese thing. They would like to hoard gold and they think that they're safe and they're making the best money. Now, I'll tell you the bias, why that bias comes. When it comes to capital markets, they say stocks are risky. You end up losing money in the long term. The markets are manipulated. So they keep saying that. The next one is they say that we are not experts, and how do we value companies? We don't know what's discounted cash flow, what is free cash flow to firm. So how do we basically do that? So a lot of people do not invest because of this reason. The next is markets are for gamblers, and retail investors don't stand a chance. And the big fish in the market, they're manipulating the market for their gains. and we don't get anything out of it. I will not disagree completely with that. Yes, the market, inefficient markets have a lot of manipulation. Even the established markets. I mean, the best case that we have right now is GameStop. Now, GameStop was a stock that was rallied because of a chat group, and people started propping up the price, taking it from $2-3 to $350, and then it crashed. So things happen, but if you take a longer term, a typical investment cycle for the equities is like 4 years, but for a retail person, I'm saying 10 years. So we see the performance over 10 years and how that plays out for you. The last is our investment size is small, we won't make money. I have a lot of people who are too ashamed to say anything. They say that I just have, let's say, 10,000 or 20,000 Saudi Riyals, or let's say I have $2,000. I cannot buy anything, right? So people always complain about that. As I already explained, that you have a lot of products where you can even start investing. Let's say in Saudi, the mutual funds start your investment with less than 10,000 Saudi Riyals. In Pakistan, you can start investing with 2,000 Pakistani rupees. In the US, you can start with $500. So the ticket size is not an issue. And there are funds which even take smaller amounts than this. So even that's not an issue over here. Now, I'll try to clear a lot of misconceptions and try to educate you to the best of my knowledge. Okay. Now, before I go on to numbers, all the data in here has been extracted by myself from reliable sources that I feel. It's from Bloomberg and from the stock exchange websites of those markets directly. However, I'm human. If there are errors in any of the data, do tell me, do let me know. Apologies if there are, but the data that I've presented is the best to my knowledge, and it's from very reliable sources. Okay. Now, this chart, I hope everyone can see that it's a bit messy. That's why I made the table downstairs as well. Now, this is basically a 10-year chart. I hope you can see my cursor as well. Okay. This is a chart of 10-year data starting from 2010 to 2021 right now. Now, this is the price performance of 5 of the items. What is it? It's the KSE 100, which is the Karachi Stock Exchange, the Pakistani markets, the S&P 500, the real estate index. There is a global real estate index which tracks the performance of real estate, because you cannot track the investment performance of Al-Ikarat, Al-Qahtani, or let's say Mia Estate in Pakistan. So you have real estate indices which track the performance of real estate as an asset class. Then we have TASI, which is the Saudi Arabian markets, and then we have gold, which is the favorite for our moms. Anyways, the first line that you see in here is the red line, which is the Pakistani markets. Before I say anything, these are not adjusted for exchange rate returns. So the exchange rate losses that you had over 10 years need to be accounted. So your actual return, if you are a foreign investor, is going to be lower than this. Just behind that, I mean, if you see from 10 years, we have, it's more than up 300 plus. Okay. If you look at the S&P 500, it's just in there, and it's the yellow line. It's over here. The next that you have is the orange line, which is the real estate index. It's coming in third, and then it's right at par with TASI, the Saudi market, and then you have gold at the last as an asset class. Now, the only thing that you need to see is not only the returns, but also you need to see is over the 10-year cycle, this is the line. If you go below this line, you're basically making a loss. You can see how many asset classes have gone below this. It means that, let's say, after this 1 year, I mean, if you exit before 1 year, you are taking a big risk. After 1 year, almost none of the asset classes have turned negative. So basically, you did not lose money other than small losses in gold. Not a very fond investor of gold, but still. But all of the other asset classes have remained positive. So your portfolios have not lost you money. Yes, there has been a lot of volatility in the markets. Now, the Pakistani markets are not very mature, not very developed. We have less than 500,000 investors in the Pakistani market. Compare that to, and we have, let's say, 800 listed companies in the Pakistani market. But if you talk about the US markets, you have more than 5,000 listed companies, and your investor base is in multi-millions. So it's a much more reliable market to track. And if you see that market, the volatility has been very much limited. You don't see a lot of ups and downs other than a few jitters, because this is a normal course of business. You have the oil price crash, and then you have the financial crisis, and then you have some political issues as well. So, but over the long term, over the 10 years, you have made shitloads of money. Next is, if you just see, I mean, where gold is right now. So it's not the best asset class. You can go and tell that to your wives, to your sisters, and their mothers that, okay, gold is not the best investment. We have other avenues as well. Moving on. Now, the key question that comes in here is, how do you value company? Okay. Now, people always say that. I was having this debate yesterday with my friends. They said that when I tell them, okay, listen, guys, I made XYZ amount of money on XYZ stock, they say, yeah, ignore it because you sit all day and do that. That's why you're making money. I said, no. Everyone, even all of you, are research analysts. And I'm not only referring to people who are from the finance background. Now, how do you value companies, or how do you pick value? The portfolios that I've made today for all of you are those names that you see every day, that you use every day, but you just don't focus and try to see how that's doing. I mean, that's the only point in here. You just need to shift your focus. I mean, me as a research guy or someone else would look at the same information that you're looking at, but we're trying to take it, tackle it in a different manner. So that's basically how we approach it, and that's what you need to do as well. Now, let's start with the sources of information that you have: news, political advertisements, Twitter, Instagram. I know everyone likes to sit on Instagram, check different food blogs or models or cars or XYZ. But even in that, you can track the investments and you can see how your companies are performing from a marketing perspective. Are they launching new products or are they not? Right? If I was a regular Instagram or a Twitter user, or if I follow the advertisements in the last 3 years, I'm talking about Saudi Arabia. Now, there's a company called Nadic in Saudi Arabia. That company has been going through a turnaround. I know that because I've tried to cover that company as well. But people sitting on the outside now, my mother, my father, anyone, they see advertisements. They see new products from them being launched every day. They see them stocking the refrigerators at all of the supermarkets every day, and they saw themselves that they started using more Nadic products. What does that tell you about the company? That tells you that there is a company which has a focus, which is trying to bring products which are relevant to you, relevant to the market, and it's able to sell them. It's no rocket science, right? The stock of that company in the last 2 years has gone from 26 Saudi Riyals to 42 Saudi Riyals. That's close to 100% return in 2 years. That's basically the power of turnaround. I could pick it because I was doing the numbers as well. You could not have missed it if you tried to follow how their products are going about. Okay, products that you and your people use on a daily basis: Google, Almarai, STC, Apple. I mean, 10 years before now, almost 100% of the participants in here have been using Google. I mean, just the fact that if you want to tell someone that search it online, what do you say? You say Google it. That's the branding that Google has done. And this has not happened over a year. This has happened over multiple years. So are you trying to tell me that there is a company which is a synonym for search and you think it's not going to do well? I know their search business is not their core business, but you see that they have been into almost every part of your life. Before valuing a company, I tell everyone, even myself, when I try to value a company, what I do is, what I try to, yeah, okay. We have some questions coming in here. Guys, I will be answering your questions. Please feel free to drop them, but I would like to answer them at the end of the presentation. Yeah. Now, if you sit back and you think about your life, you have 24 hours in a day, you sleep 8 hours a day. How much of your time is in the ecosystem of one of these companies? Either it's Google or it's Apple. Just think about it. From your cell phone to your watch, to the alarm next to you, to your workstation, to the music that you listen in the car, to the news that you listen to, all of them have been linked to these places. Are you trying to tell me that when this company is with me for 60% of my day, it's not going to do well? It's definitely going to do well. So that's what you had to think, and you had to invest at that time. Now, there are companies like Savola. If someone is in Saudi Arabia, Savola is the company that owns the Panda stores. Now, Panda, I've been born in here, so I remember when I was in school, we used to shop a lot at Panda, and then there was a very bad phase, 3 years. The company was in a complete shakedown. They started making losses. How do I know that as a retail investor? I did not see Panda's advertisements at all. I saw their stores were not stocked out, they were completely empty, and nothing was happening with them. What do I do with that? I know the company is not doing well, it's in problems. Now, 2 years before, the company started advertising aggressively. You start receiving their offers, you start seeing their stores opening up, you start seeing their stocks being shelved properly. I know the company might have been doing something good, right? Now, I was covering the company. I know the stock went up from 20 Saudi riyals to close to 50, and now it came up to 45, but it went up to 50 Saudi riyals. So it gave you a return of more than 150% in the last 2.5 years. I could see that on street. I just, as a retail investor, I just did not try to focus on that, right? So if I do that, definitely I can start making good investment decisions. Now, the prices charged are the same or increased. When I am a research analyst, when I analyze the sales of a company, I say, okay, let's say Apple's sales have increased by, let's say, 20%. Okay, I ask them what of that increase was coming in from price and how much was quantity. The investment, the company, the management tells us that this is XYZ. You as an investor, you have used iPhone 1 to now, I think it's iPhone 12, or I don't even know. I'm, by the way, an Android user. So you've seen over the years, and it's all over the media, how much premium is Apple charging for its cell phones from one launch to the next. It's been on the upside. What does that tell you about the company? The company has a technology, it has an investor base, and it has the ability to charge you more, and it's able to sell more products as well. 5 years before, I think, let's say if I have a group of 10 people, 3 of them would be using Apple. Now, probably 7 of them use Apple. What does that tell you? Higher market share, and all of them are paying more for the same smartphone than the previous one, right? So the company is gaining market share and charging you higher price. It's no rocket science. You ask your friends, you go check a little bit of ads, and you get that. Now, the next question is, how is the company inside? Now, everyone has friends or relatives or someone who works in some place. I say you ask them. How? Don't ask them that what's your salary, okay? Just ask them, are you paid well? Try to track their lifestyles. Are their benefits upgraded or not? What kind of benefits is the company giving? That tells you the sign of what a company is doing well. But people living in Saudi would know it very well. STC has been one of the best companies in Saudi in terms of operational level and also as a stock as well. Now, if you speak to any employees at STC, you'll know that they'll keep telling you about, we have amazing events at the company, we had a decent raise, we had a bonus, and then we are getting an upgrade in our insurance. These things tell you that, okay, fine, the company is making money, they are managing it well, and they're giving it to the people. On top of that, you are seeing STC. I mean, anyone who landed in Saudi Arabia, their first cellular connection or their first landline connection was STC. It cannot be anyone else, right? So from that time to now, they have been a 10-year user of STC. From a cell phone company, it went into digital payments. It's an investment company. It started their own content, and I don't know, it might be the next Netflix of Saudi Arabia, right? So you've seen them launching products which you use, and surprisingly, they're charging you more than they were charging you last year. So they have been able to increase the prices and still keep that market share. That's not too difficult for you to identify as an investor. You are a user, so you can definitely identify that, right? Next, I mean, now if we have some experts, yes. After this, if you have a little bit of knowledge, then you try to open up the financials. All the listed companies have financials available on their websites or on the exchange website. You go and you look for the sales growth, you look for the margin stability, you see the cash flow generation, you see what's the leverage the company has, how much loans, are they able to repay them or no, what's the quality of earnings. I mean, I always consult all my people from finance, the accountants, especially about quality of earnings. And because recently we've had 2 IFRS implementations, so there were a lot of things which just go beyond my head. So I need to ask them for the expert advice that, okay, how does this IFRS change happen? How does LIBOR and the change of LIBOR affect the financials of the company? And I try to see, okay, there's a provision for inventory losses. What does this mean? How is it calculated? What's the calculation for the ECL? So these kind of things tell me the quality of company. I see company posting a lot of provisions or one-time things. I know their quality of earnings is pretty low. So I will not rely on their bottom line as much as I rely on a company with low provision. Last is the multiple and earnings yield. Now, I've always tried to explain something which has been a key debate always, is the price and the value debate. When we talk about investments, a lot of people talk about the price, they don't talk about the value. They say Tesla is at $580. Is that the value of Tesla? No, it's not. Is that the price? Yes, that is. And they say that the price will go up to $700. That's just the price, that's not the value. The value of Tesla right now, if you look at their 10-year forecast, would probably be around 400 right now. It could be $2,000 for someone, it could be $5,000 for someone. So the value is a relative concept. A price is the price at which you trade, or when a buyer and seller agree. So people who confuse price with value always end up paying more for an asset which not worth that. So what you need to do is you need to try to see what the value is. I don't expect retail investors to value companies on a daily basis. I want you to pick that feeling, to see those the points that are right there in front of you, that you see every day in your life. So it's basically not going to be a very what do you say, a rocket science. Okay, now what I've done in here is I guess we have someone who's raised their hand. Okay, we'll have the questions at the end. Okay, what is this? Okay, so now what I've done is I've picked some names from the three markets, and I have calculated the returns. If you would just follow me from the top of the table at the top has basically the companies. These are 10 companies. Now, these are 10 companies that existed 10 years ago. They had decent presence 10 years ago. So the probability of you investing in them was pretty high. Anyone living in the US, and if he says that he doesn't know about Home Depot, Johnson and Johnson, or Walmart, is probably lying, or he was living in a grave. So you know about these companies. They've been using Amazon, Apple, and Google since then. So I picked these companies, a mixture of them. And by the way, some people would say that there is a bias that he picked the best companies. No, these are in terms of returns. These are the companies. There are other companies which have given you more returns than these, but I have picked up companies which you could have also picked up 10 years ago if you put your thought into this. Now, I have my companies in here, and then I have my 1 year performance, 3 year performance, 5 year performance, and the 10 years performance. Over here, because I don't expect you to have a very tactically allocated portfolio. A simple portfolio is you divide your money amount among all of them equally, right? So whatever X amount you have, you divide it on the number of stocks. That's your weight in every stock. Okay. So this is the return of your portfolio if you invested equally in all of these companies. Okay. So in a nutshell, the best company that you have in here in the last 10 years has been Amazon. Picking Amazon as a stock in your portfolio was not a very low possibility in 2010. It was a good company. You were doing business with them. Everybody knew them, and they had a very solid presence. So the probability of you picking up is pretty high. In 10 years, the stock has given you 2,200% return over 10 years. It's a cumulative return, not an annual return. Okay. The worst company that you have, the most decent one, Walmart. You're like, where does Walmart go from here? Well, that's also given you almost 160% in 10 years. Now, your portfolio, because it's a balanced portfolio, you're getting 915% in 10 years. Now, that's an annual return of 26% since 2010. Now, what does that mean in numbers? Because numbers are much easier to follow than percentage, right? If you had an equal weighted portfolio, the table below is basically two columns. We're putting in an investment, excuse me for this USD, it's Saudi Riyals again for simplicity. If you have an equal weighted portfolio, it means you had equal investments in all of these stocks. You made 143,000. That's your total portfolio value. Okay. So you invested 100,000. After 1 year, your portfolio is worth 143,000. After 3 years, it's 198,000. 5 years, it's 318,000. And in 10 years, you become a millionaire. How did you become a millionaire? You put in 100,000 Saudi Riyals in these 7 companies, which you knew are doing well, had decent management, had decent market share, and that made you a millionaire in 10 years. Okay. Now, there is a luck factor as well. I would not deny it. And I consider myself as very lucky when it comes to equities. So the luck factor, how did that play out? If you were lucky and you put all your 100,000 Saudi Riyals in Amazon only, just one stock, I would never recommend that to anyone. I would always want them to have diversified portfolios. If you had your investment entirely in Amazon, my friend, you made almost 2.4 million Saudi riyals over 10 years. So you're basically becoming a multi-millionaire in 10 years with an investment of 100,000 Saudi riyals. The probability of you identifying Amazon at that time and holding in 10 years is pretty low, because the moment you see that doubled or tripled, you are likely to sell it. But that's what the numbers in the history says. Okay. Now, does that mean Amazon is going to give you the same returns in the future? Maybe yes, maybe not. Nobody can tell you that. Can someone tell you that all these 10 companies are likely to make you profits in the next 10 years? Maybe yes, maybe not. So past returns are never a proxy for future returns, but they tell you what the company could achieve in the next 10 years if they did exactly what they did in the last 10 years. Okay. Now, these are companies which have been disruptors. I always tell my friends, I say, if you are in any business, you are in any tech business, you always should wish that Amazon does not enter your line of business, because Amazon and Jeff Bezos have the ability to surprise you to that extent. They enter a business, they disrupt it completely. They have the highest market share within a couple of years. They kill competition like anything. They have shitloads of cash balance. They can burn money like anything, and you don't stand a chance. So it's that kind of a company. Is that bad? Is that good? Yes, it's good in a way. The company has exposed a lot of weaknesses and a lot of inefficiencies in a lot of segments. Uh, just to give you an idea, Amazon itself currently owns 8 to 10 uh, uh, airplanes of their own for transportation. I mean, we have some airlines globally which don't even have that fleet. They have probably a leased one. So that's the nature and the size at which Amazon operates. They have penetrated and changed your markets and the businesses completely. Same as the case with Apple. Now, Apple, from a value perspective, there might be an issue, but they have been able to generate huge loads of money, and they've been able to enter every segment that is related to their products. So that served well for them. I don't blame them for them. It's not a feature, it's a bug. So they've been able to do that. So these are companies which have been revolutionary in the last 10 years. Are they going to be the revolution in the next 10 years? Maybe, maybe not. Now, if we go to the Pakistani markets, uh, I've limited to just 3 stocks. And by the way, all the picks, just to be clear, if you run the S&P Sharia screens, these stocks are Sharia compliant even as per S&P. I'm not sure about Walmart, but rest of all of them are Sharia compliant. If you agree the S&P is Sharia methodology, then these stocks are Sharia compliant from the Sharia perspective as per the ratios. If you feel like, okay, it's not Sharia from any other perspective, then feel free to ignore that. Next is the Pakistani markets. If you go to the Pakistani market, I've picked three companies. Anyone living in Pakistan will not be surprised that okay, Mizan Bank in 2010 was doing pretty nice. Abbott Labs is a very famous company when it comes to pharmaceuticals. And then you have NetSol. Anyone who has worked in any office or any place knows that they have had a relationship with NetSol in terms of corporate business. Now, the same returns, the best company that you had in the 10 years is Mizan Bank, which gave you almost plus 1000%. Again, if you have an equal weighted portfolio, you made 130% in 1 year, 54% in 3 years, 131 in 5 years, and 766% in 10 years. That's an annual return of 24%. And mind you, this is not adjusted for exchange rate losses. So if you're a foreign investor, you would have some exchange rate losses on this, and your actual return is going to be lower than this. In terms of numbers, if you had an equal weighted portfolio and you invested 100,000 Saudi Riyal 10 years ago, that amount is worth almost 866 Saudi Riyals right now. You're close to $1 million. If you were lucky and you bought only Mizan Bank at that time, you would have had 1.25 million Saudi Riyals by now. I mean, that's okay. Questions. I knew Sharia compliance would have some questions. Okay. So this is how the Pakistani markets are. Yes, it has risks. It's an emerging market. It has political risk. In the last 10 years, we've had a lot of political upheavals as well. But if you look at the values in the valuable names in the market, this is the kind of return that you can make in those companies. If you go to the Saudi market, this is what we do more often, right? I mean, most of our clientele right now is Saudi people living in Saudi Arabia. I picked some companies which were not a surprise to pick 10 years ago. As I said, when you landed in Saudi Arabia, the first cell phone connection you had was STC. At all times, I can bet this with all of you. Go to your kitchens and see if you have one Almarai product in your kitchen. You would have at least one. It could be milk, it could be cheese, it could be juice. If you don't have any Almarai product, that's a very strange thing. So, and that's been the case in the last 10 years as well. Raji Bank, probably your first bank account was in Raji Bank. You travel in Saudi Arabia, you go to any city, any small place, the first bank you see is Raji Bank. You want to take a credit card, you go to Raji Bank. You want to transfer your money overseas, you go to Raji Bank. So it's not a rocket science to pick Raji Bank 10 years ago. Bupa. Insurance has not been a very old concept, but still a relatively old concept. So when insurance was mandated, the first companies that were doing well was Bupa, because it's the largest healthcare insurance provider in Saudi Arabia. It's a global company and their Saudi operations are pretty solid. And that's why for you picking that 10 years ago was not a difficulty. Mawasat is a hospital. One of the finest hospitals. And yes, you visit the hospitals, you see them every day. You go after 2 years, you see, okay, fine, the hospital is too crowded. So they're having a lot of patients. Then you see from 2 dentists, now they have 3 dentists. My brother himself is a dentist. So I know that he was looking at 5 patients 5 years from now, and today he's looking at 20 patients a day. So I know that's growth. That's more patients. Even if the prices are stable, he's making at least 4 times more in terms of the clinic, not himself. Okay. Uthaim is also the first grocery store that you had when you used to go out every weekend and shop for the house. Jarir bookstore. People living in Riyadh would know the first Jarir bookstore, why the name comes in, was they had a very small bookstore located on the Jarir street in Malas. And that was the go-to place for all the companies or all the people for their stationery needs. From that, they moved to their branch in Al Hassa, and then now they have more than 70 branches in Saudi Arabia and globally. All this has happened in the last 20 years. So you would have seen that, you would have bought from them a lot, and you would know that it's a good company. Now, these companies, the best obviously we have in terms of returns was Bupa, 1,300% on a portfolio level. If you had equal weights in all of them, you did not know which one to overweight, which one to underweight. So you put equal money in all of them. You made 46% in 1 year, 59% in the last 3 years, 517% in the 10 years. And mind you, this has 2 of probably the worst crashes. In fact, 3. Yeah. You had the pandemic. You had the 2017-18 crash, and then you had the 2015-16 crash. So you've had probably the worst crisis of Saudi Arabia in terms of a financial crunch. And despite that, these are the returns that the market has made in the long term. Yes, if you invested in 2016 and exited after 6 months, that's obviously not going to work for you. So that's why my focus is 10 years. I'm trying to focus on the 10-year return. On annual basis, the Saudi market, these names have given you 20% on an equal weighted basis. You put in 100,000 Saudi Riyals in divided among all of these stocks, you make 617,000 at the end of 10 years. And if you were lucky and you bought only Bupa at that time, probably your father works in Bupa or your mother works in Bupa, and you think they're doing really well, and she tells you that we have amazing bonuses and the company is growing and we are expanding like crazy, you put all your money in Bupa. Not recommended at all, just for illustration purposes only. You make 1.34 million Saudi Riyals. That's the equivalent of buying a small house in the north of Riyadh, a very small house, 200, I guess. Yeah. So that's what you make from 100,000 Saudi Riyals. Okay. Moving on. This is the return summary for all that we discussed already. It's basically all the asset classes. US equities, Pakistan equities, Saudi equities. Now we've added real estate and gold to give you an indication of what the returns have been. Over the 10 years, I'm looking at the CAGR only, the annual return only. 26% is what you made in the US annually over the last 10 years. In the Pakistan equities, you made 24%, Saudi, you made 20%, real estate, you made 9%, and gold, you made 4%. Now I want to give you an example and tell you why people still fall for real estate as the best asset class. It's basically, I've named it, I hope it becomes a thing, the ticket size bias. Now, why do I call it the ticket size bias? If you are from Pakistan, you buy a house in Pakistan which is worth 10 million rupees. which is 250,000 Saudi Riyals and $65,000. It gives you a gain of 100% in 10 years. Okay. In 10 years, it has given you 100%. This is the 10-year return, which is 100%. And it gave you a 5% rental yield on every year. Okay. So that gives you, after 10 years, if you saved all that rent, you would have had 25 million PKR, which is 625,000 Saudi Riyals and 160,000 USD. Now, when you sit back and see, oh wow, I made 15 million rupees in 10 years. Now that's an asset class I'm talking about. If you do the same with equities, now what happens is, when you invest in equities, you would not invest 10 million probably. You'll just put in half a million. Okay. So you put in just 500,000 PKR, which is 12,000 Riyals and $3,000 only. You got a gain of 915%, the 10-year US equities in 10 years, plus a 5% dividend yield as well. Okay. After 10 years, you would have 6.5 million PKR or 162,000 Saudi Riyals. The problem is here in the equity part, you just made 5 million. You're like, nothing. But in the real estate, you made 15 million. You're like, wow, now that's a big ticket size. If you put that large ticket size in equities, just imagine the returns that you have. So that's the bias why people again fall for real estate, because the ticket size seems pretty high, and you see, okay, fine, I made something out of it. In the defense of real estate, there is a qualitative aspect of that as well, which I would not refute, which is the safety and security, or the peace of mind that you get from having your own house, or probably a own commercial complex, or probably a farmhouse, or anything of that sort. That is something which is slightly difficult to quantify, and I would not blame anyone for investing in real estate despite a lower return. Now, when you have this return history for, let's say, it's 3 asset classes, but if we call them 5 items in your portfolio, which is US equities, Pakistan equities, Saudi equities, and real estate and gold. If you have a joint portfolio of them, you would still make a decent amount over the long term if you invest them in a disciplined manner. Now, going on now, if we talk about, this is the portfolio and how do you allocate your funds into different countries. Now, the first table, please follow me. The first table tells you about the markets, and these A to J are the different portfolios that you can have. You can have, by the way, infinity portfolios by changing the weights in all of them. But for simplicity, and I don't expect you guys to overweight or underweight very aggressively, so I've kept it, simplified it to this table, which we will follow for our presentation only. Okay. In this, what you have is, you have 4 portfolios and you have 4 options. Let's stick to it very simply. One of the portfolios, you're investing only in the Saudi market, and B, you're investing only in the Pakistani market, and C, you're only investing in the US markets. And D, you're not sure, you're like, I want to diversify, so you divide it equally among all of them. Very simple diversification for retail investors. Nothing wrong with it, but it's not the most optimal, but still nothing wrong with it. Okay, so we have these 4 portfolios that we'll be tracking, that how much would you have made if you put 100% in Saudi, 100% Pakistan, 100% US, or you divide among all of them. Okay. Now, this is the first, is the 1-year return for your portfolios. Okay. Again, I've put the portfolio again so that it's easy for you to read the allocation and then see the returns. In portfolio A, if you had all your money in the Saudi market, you made 46% in your portfolio in 1 year. If you had all your money in the Pakistani market in 1 year, you made 130%. If you had all your money in the US for 1 year, you made 43%. And if you divided among all of them, you made 73% in 1 year. Okay. So this is not the best return, by the way. The best return was Pakistan. But in order for you to pick Pakistan 1 year from now, you need the skill to pick this country among all the other countries, right? You are a retail investor, you can't do that, but you can diversify, right? We in our CFA books, we refer to it as dumb diversification, but I say it's completely fine. Retail investors wouldn't know. They say, okay, fine, I want to take exposure to all the 3 markets. I'll buy 30% Saudi, 30% Pakistan, 30% US. I still make 73%. Not bad. If you go to the 5-year scenario, again, you're making the best is see if you put all your money in the US markets. But if your diversified portfolio is existing, you make 154% in 5 years, which is again not bad. It's not the best, but it's not the lowest. Now, the 10-year, which is my favorite time horizon, you make again the best that you would have made is if you put all your money in the US equities. But you are diversifying it among 3 companies, so you're making 733% on your portfolio in 10 years. So diversification, now for diversification, there is something known as, some experts call diversification as dumb. They say, I mean, Warren Buffett is of the opinion that people diversify because they don't have conviction in a single name or a single company. He is right and he's wrong. Okay, he's right because yes, if you have the confidence in one company, you put all your money in that company, the returns are huge. But no matter how much due diligence you do, there are going to be some factors which you miss out. There are going to be something that you might not be able to pick, and things change, and you might not make as much as you expected at that time. Okay, so diversification, what it does is you might have losses in one of your investments, and in the others you might make some money, so that balances your overall portfolio. So that's why diversification is a very recommended strategy. Yes, professionally we diversify based on a lot of things. I look at the correlation metrics, I look at my funds targets, I look at my flow of funds into the fund. So that's how I will diversify. But you as a retail investor, you'll start diversifying equally. Very simple. Once you get a hang of this, then you start shifting and trying taking calls on the country. If I was sitting right now, I know, okay, the US dollar is pretty weak. uh, we see in these 3 markets, we see Pakistan as probably the most promising. Then we have Saudi and US at the third level. So I'd put more money in Pakistan right now. But if I'm not sure, I'd divide it and split it among all of them. Now, this is what we just discussed, diversifying by value. See, my diversification, when I say professionally, it's from a lot of perspective: correlation, risk profile, duration, security, geography, sector, everything. But for you, just stick to 2: geography and by security. By geography, divide it among different countries. By security, you divide them among not only Amazon, you have 7 stocks in there. Okay, so that's how you pick it up. Now, uh, even today, now this is what happened 10 years ago. From today, how do you pick up a company? I would again suggest you guys, most of you have a decent knowledge of finance and have a decent know-how of how financial statements work out. Others might not. Focus I would like you to focus on 3 things only. Any asset, it could be a company, it could be a stock, it could be a real estate, any asset that has a robust business model. If today I come up with a company and I say that it sells floppy disks, okay, 3M used to sell floppy disks at one time. It doesn't sell that anymore. If I tell you they were selling floppy disks, you know it's not going to work anymore. It doesn't have a robust business model, right? So you first thing that you need to see is a robust business model. From today, think 10 years down the lane, what are you most likely to use 10 years from now? Okay, anything that you're going to still drink water, you're still going to drink milk, you're still using telecommunication in one form or the other, you're still using the internet, you're still using computers, you're still going to live in a house, still going to pay rent to someone, right? These are businesses that are going to stay for next 10 years. Some businesses, once again, nothing against cryptos 10 years from now, they might be wiped out completely. So you can't be sure of that, right? Now, is the management professional and responsive? That is indicated by the few points that I mentioned before regarding product launches. If a company is doing decent product launches, relevant product launches, it is likely to stay relevant in the market. If it does not, then you know that it's not going to do well, right? So you try to sit back and think, okay, what is STC doing right now? What is Raji doing? Raji has started offering probably real estate from their own portal. So I see the company is trying to enter new products, right? It's trying to offer you gold futures or gold products through their online banking platform. I see that's a good sign, right? Tomorrow I see Raji setting up a digital bank or probably getting into some other thing. Yes, I know it's a good thing. So you need to pick these kind of things and try to see how is the management trying to handle the business. Do they know what they're doing or they don't? The last is the deal breaker is basically the probability of generating positive future cash flows is high. As long as this, I don't want you to assign a number to that. I'm not asking you to tell me if the free cash flow yield is going to be 30%, 50%, or 70%, because you can't say that unless you build the entire model and do the entire valuation yourself. I want you to tell me what is the probability that STC or Almarai or Google or Amazon is going to generate cash in the next 10 years. If you say the probability is high, I'd say you still buy it. Okay, now again going back to the price and value concept. This is a 10-year estimation, right? Right now, Amazon might be very expensive. There is a lot of liquidity in the market. People are betting on stocks like crazy. So yes, they have probably problems with the valuation. If you buy it right now, 3 months from now, it might give you a negative 10% return. But 10 years from now, if the company survives and it keeps doing what it has been doing right now, you're likely to make a lot of money. So that's what I want you to think about. I don't want you to think that, okay, it's too expensive right now, so I shouldn't buy. You need to buy, but you need to build it up gradually. Now, how do you build up your portfolio gradually and how do you do it? I have a very basic, and if somebody can challenge me on the concept of that, I cannot justify that. But still, I tell all my friends and everyone that I advise in a personal capacity or a professional capacity, do not put now capital markets only. I love equities, I love the capital markets, but still I know there's are risks attached to it. Sometimes things go south of what you expected. Do not put more than 10% of your savings or net worth in capital markets directly, initially at least. Your target in the long run should be that 10% of your regular income should fund your portfolio. So let's say you're making 10,000 Saudi Riyals a month, you put 1,000 Saudi Riyals as an investment, any asset class, any asset class. Next stage, diversify. If you made money on one of the stocks or one of the things, do not start believing that it's always going to do that. Okay, diversify it. If you have an equity portfolio, diversify among 7 to 10 names. If you want to think about asset class, if you have a house, now don't invest in real estate again, pick some other asset class, try to hedge that. If you have a lot of fixed income or sukuk exposure, the Sharia compliant sukuk exposure, do not invest more in sukuk. So this is how you diversify. When you learn over time, now going back to my $3 story, when I started learning from that time when I opened my account with $3 to now I have conviction on some names, so I can concentrate my positions and try to take a bigger call on a single name. I might have 3 stocks in my portfolio because I have more confidence and I have more knowledge about the companies than probably a typical retail investor. That's what you have to achieve as well, and you don't need a degree for that. You need to learn that yourself over time. Now over 3 to 5 years, you'll start getting a hang of why stocks are moving the way they are moving, why the markets are moving the way they are moving. Okay, very simple. Everybody follows the US elections, right? You see Biden coming in, you see Biden being very focused on a green energy policy. You know which companies are going to do well in the next 5 years until he's in here are the green companies. You go to NextEra, you go to Neo, you go to GM, you go to General Electric, you go to these companies which are in the alternative energies. So you pick these companies with conviction because you started having a track of how policy is going to evolve in the next 5 years, right? This is going to basically educate you over the next years, and then you will be in a more solid position to start managing your money in a more concentrated and more optimal way. Now, reinvesting the profits. I would say yes. If you don't have a need, I would like my investment gains to fund my portfolio and stay within the portfolio. But if I want to party, I want to buy a new car, I want to take a trip, I want to have a very lavish wedding, nothing wrong with that. I take a portion of that and I enjoy with that, because you're not going to live longer than 80 or 90 years, right? So you might as well enjoy it. So you take that money out and you keep your core portfolio or capital still invested, and the returns can come out to you. Or if you need more income, let's say your father is suddenly sick or not feeling well and you have a lot of healthcare expenditures that you need to do on, so you need some additional income to support your core income. So you take your investments income out to fund these expenses, or keep a rainy day cash balance for, let's say, if something happens from a medical perspective. And so that's how you do it. Now, for all of you, how do you start investing? I think some of them have asked that question as well. From here, how do you start investing? If you have a decent knowledge, I would always suggest that you go directly. open up your trading or brokerage accounts with any place. I'm not here for marketing. You can contact me separately if to name those companies for brokerage or funds. But I would like to suggest that if you have a decent knowledge, try to trade. If not, the best way is to go through a mutual fund. Now, for mutual fund, without quoting the names, I'm telling you there is a Saudi equity fund in Saudi which has given you in the last 10 years 120%. Okay, so if you had invested in that fund, now that fund is managed by CFAs, experts sitting, a team of 8 to 10 people whose work daily is to manage these funds. So they have been able to make you 120% over 10 years. So you put your money in that fund. Now then you have a gold fund. Again, I'm not naming any company right now. You can contact me separately for that. Then we have a North America fund. These, by the way, all these funds are present in Saudi Arabia. As a retail investor, you can subscribe to them. Then you have an emerging market fund, which is giving you almost 100%. You start with these funds and try to follow their performance, try to see how the research comes out, try to read their reports, and then you'll be able to understand how things are basically evolving along, right? With the passage of time, inshallah, you'll be learning. So probably you will be managing portfolios much more efficiently than I am managing right now, 5 years from now. And I'd love to see that day. So I think this is how you can start. I like to talk a lot, and I talk very fast, and I could go on for hours. I know I've been boring you for the last 1 hour. So I guess that would be it from my side. I would stop here. These are my contact details. I think we can share the presentation with everyone. So you can have my cell phone number, my email, and my connect me on LinkedIn. That's basically how you can reach out to me. Feel free for any kind of suggestions. I'm always open for that. Based on my time constraints, I will be more than happy to address any questions. Now, I guess we can go on with the Q&A session. And I'm not sure, Salman, how do you go ahead with the Q&A? Would you be doing that?
Yeah, thank you so much, Ashar. Ashar, we have received some questions. So first, I'll tell you all the question, and you answer one by one, and later on we'll open the session for the all the participants to have a live questions.
Okay.
First of all, Muhammad Mumtaz has raised his hand. Muhammad, you can speak. I have opened up for your speaker. Yes, Mr. Mumtaz.
So can you hear me?
Yeah, you can speak now.
Can you hear me?
Yeah.
Assalamu alaikum. I feel it's very valuable for everyone, I believe, and it's appreciative. We have to appreciate for this this session by IFA. And I would like to have a recording so that we can review this as and when we need to, and maybe our children also will be like to see this and learn something. So, so this I would like to thank for this session for Ashraf.
No problem at all. Thank you so much. It's always
Yeah, Mumtaz, basically, you will have this recorded session on our YouTube channel. A name I'm posting on in the message in the chat. You can see the name Institute FA. If you go to Institute FA on the YouTube, you will find all the recordings, even our previous sessions as well. So in a couple of days, we'll be uploading the recordings over there, right, Jonathan?
Yeah, sorry. Hi, Salman. Apologies all. I was just on a separate meeting. Yes, Salman, this particular webinar will be uploaded onto YouTube, and it should be available. Well, it's the weekend, Saturday and Sunday here in the UK. It'll be available come Monday. Yes.
Yeah. Okay. So Ashar, we have some questions. The first question is, are there any reliable real estate funds in Pakistan?
Well, that's a problem, and I think that's a business plan that I'm working on as well. In Pakistan, in terms of real estate, you have private real estate funds, okay, but those are for larger ticket sizes. But I mean, if people are from Lahore or Karachi, they know a house would cost 3-4 crores, but these private funds would offer you that at, let's say, 50 lakhs, and you can be a unit holder. In terms of who manages that, I think Laxon does a couple of them. The others I'm not sure of. I can get you the names, but there are not a lot of them. So I myself was also considering of developing something like that, because we don't have a lot of funds. But in terms of listed funds, you have only the Dolmen City REIT. It is the Dolmen Mall in Karachi, which is the part
Yeah.
of a REIT, and it gives you a yield of around 11 to 13% annually, because they have to pay out 90% of their incomes as dividends. But in private, you have a couple of funds, not a lot, but they'll be for still larger ticket size. I can try to get the names for that.
The next question was, what is the meaning of CAGR? It's annual return, I think.
Yeah, it's CAGR, it's compounded annual growth rate. It tells you the last value and the first value. If you want to see the return annually, that's basically what it tells you.
Okay. The next question was, someone posted, Amazon is Sharia compliant. It's a question. Are they not selling alcohol? Something like that. So you know about Sharia thing.
Yeah, that's why I never try to get into debate for Sharia, because it has a lot of gray areas. The problem with that is, if you go by the Sharia methodology that is accepted by the Standard & Poor S&P, our Islamic Sharia scholars in the UK and the US have ratified it. That says that if your non-permissible income is less than 5% of your total income, you are still Sharia compliant. So if they might have revenues coming in from interest, probably alcohol sales, which are less than 5%, they might still be able to qualify as a Sharia compliant company. And I mean, they have a methodology document over there. Some people agree with it, some people don't. So that's why that's completely up to you. I would never say that it's Sharia by everyone's standards. Some people are not comfortable with that. I mean, if a company has even $1 of interest income, some people call it non-Sharia. But as per this, if your leverage is, if your interest income is less than 5% of your core income, you are still Sharia company.
Okay. The next is, how can I get the shares from Saudi market through IPO?
Okay. IPOs, what happens is that whenever an IPO happens, let's say Salman Habib was recently gone for an IPO, and then we had Aramco as well. So when an IPO happens, they appoint some participating banks. So let's say Rajhi, Saudi Fransi, HSB, Saab Bank, they will be participant banks. So anyone who has a current account in these banks can go to their online profile, and they can subscribe directly to the IPO. Okay, that's the typical IPO. If you don't have an account in these, you cannot subscribe. Okay. The other IPOs that sometimes happen are direct listings, like Jahiz. Jahiz is an application for ordering food in Saudi. It's going for a direct listing. For a direct listing, you cannot invest. I mean, retail investors cannot invest. But if for the bigger IPOs, your bank will offer you the subscription. Once you subscribe, let's say you subscribe 200 shares of Aramco, and you got, let's say, 20 shares as allocation, you will get those 20 shares, and then you can activate your trading account with the same bank, and then you can start trading in that stock.
Okay. So Ashar, I'll add two more things to this question from my side to understand the participant. How they can open these stock exchange account. I think it's through banks. They are also,
In Saudi or outside?
It's in Saudi, and even Pakistan, if you can explain our participant.
Okay, quickly. In Saudi, yes, the first channel is the most convenient channel is the bank that you have. All of those banks have their investment, the capital branches, so they will open their account. The second is, you have non-banking APs like Falcom, Diraya, Khair Capital, which also offer brokerage. So you can go to them and open their accounts with them. But usually it's more convenient for people to open with the banks that they are already dealing with. In Pakistan, banks don't have capital branches. Pakistan has separate investment houses like Elixir Securities, BMA Capital, Foundation Securities, IGI. So then you contact them, and then you open their account. I personally trade through Foundation Securities. My father trades through IGI. Our experience has been fine over the last 10 years. They're not thieves. They don't steal your money. So that's fine.
And secondly, is there any like in for Saudi market especially, is there any, I mean, website or any link from there the people can see who are the upcoming IPOs, something like
Yeah,
that?
sure. For Saudi markets, I mean, I think the government and the institute has been very effective. Tadawul. You can go to Tadawul's own website. It has all the listed companies. All their financials are available for free in English and Arabic. Any major announcement that the company does, you can see that what dividends the company paid. Everything is available on the website. Whenever a company announces an earnings that we announced this for this quarter, you can see that on Tadawul. The second website, easier for some people, is Argam. It's ARGAAM, Argam. Its layout is very much easier. Its information is very reliable, and it has all the information for the Saudi market. The problem is, for financial statements in Argam, you need to have a paid subscription, which charges you like 35,000 Saudi riyals for the full year. So retail investors don't use that. They can use it only for news.
At least they can get the news from the Argam.
Yes, yes, yes.
Okay, so the next question was, can we invest in KSA Giga projects? Someone posted.
Okay, now KSA Giga projects, obviously directly as a retail investor, I mean, how could you do that, right? If there's it's a NEOM or the Red Sea project, it's a big project and it's going to house a lot of people, it's going to have a lot of buildings. You can invest through companies that do business with those projects. Now, cement companies have been rallying in Saudi Arabia. Why? Because Giga projects are going to come up live. They'll buy cement, they'll buy construction materials from Yamama Steel, from Saudi Cement, from Southern Cement, and these companies are likely to do well. So if you want to take an exposure on the large projects in Saudi Arabia, you buy these listed companies because their numbers are going to be because of the Giga projects. But directly in the Giga projects, I mean, unless you buy land over there. Yeah.
Okay, so the next question somehow you answered, but I'll just put the part. How about US? Can you recommend any brokerage house for US? The person is asking.
Okay, US, yes. Some of the banks in Saudi, they also offer international brokerage. I know of NCB, they offer that, but the rates, the trading cost is sometimes very high. I personally trade through Interactive Brokers. It has been reliable for me so far. The next you can consider is Mubashir. It's basically based in Bahrain and it's present in a lot of countries. Mubashir offers Interactive Brokers and Mubashir. They offer you almost all the markets globally, and yeah, you can use these. These are the most efficient and the most reliable that I've used so far.
Okay, so the next question, I believe you have answered now. How can we invest in US stock exchange and US markets from Saudi Arabia? I think you have answered this one.
Yeah.
Okay. The next is, which are the best trustworthy online way or website to invest for foreign investors? So I think it's a general question.
I'll mention for the three markets at least. For Saudi, I already told you. For Pakistan, Pakistan Stock Exchange recently, when the Chinese acquired that, the PSX website is very informative. It has the same information as Tadawul. All financial statements and all the announcements are there. For the US markets, you can follow NASDAQ. It's a free website for the exchange, or you can follow CNBC. They offer all of that. Bloomberg is mostly paid, but if you can get that $1-2 per month subscription, then Bloomberg is also very reliable. And some people also use investing.com for that. I don't use it. I don't like their layout. They look very Ponzi to me, so I never open that.
So the next one is, could you refer some company that allow account with low capital? I think.
For which asset class?
It's a general question. They have not mentioned. So.
Okay, for equities, as I mentioned, you can start. I can name those companies, but I because I belong to one of them, so I cannot name that right now. I mean, but still, okay. We have Falcom. Okay, we have equity funds, we have money market funds, and we have a gold fund as well. Okay, so these funds you can subscribe to with a minimum of 10,000 Saudi riyals. That's what they say, and you can subscribe for even less than that. For the US markets, we don't offer US funds. US funds can be subscribed through, let's say, NCB, HSBC, any bank, they offer that. And the minimum investment is usually $3,000 to $5,000. So and all of these companies, when you negotiate with them, they even start. I opened my account at one place for 5,000 riyals. So they agree to that. So that's not an issue.
Okay. The next question is, what is your thoughts on fractional shares? What you say about it?
Okay, fractional shares is a good concept that Robinhood and Charles Schwab they brought in. I mean, Berkshire Hathaway, the company that Warren Buffett owns, or let's say Tesla, Amazon. Amazon is more than $3,000, right? So if you buy one stock of Amazon, it costs you almost 10,000 Saudi riyals. So what these brokers have been doing is it's like a mutual fund, but they call it fraction shares. What they do is that 10 people will put in some amount, and with that amount, they'll buy one stock of Amazon. So instead of you'll track the exposure of Amazon, but you did not put the entire amount. It's not Ponzi, it's fine, and it's a very good concept. I think even Interactive Brokers offers this. It's a good concept because some stocks, I mean, Berkshire Hathaway's one stock is $400,000 plus. So in order to buy one stock, you have to put in, I think, how much? 1 million or something real. So if you buy a fraction shares, you can take exposure to that.
Okay, it's like basically it's a mutual fund and backed by the shares, fractional shares.
Exactly.
Okay. So someone posted like in which market we should open accounts in the beginning, in US or not. I think you have answered for diversity, like, right?
Yeah. But still, I mean, if you are very patriotic, start with your own markets first. And ideally, US is the most mature market. So that moves a lot with actual fundamentals of the market and the economy. So I would always suggest everyone to have some exposure to the US. And then right now, in terms of timing, I'm very much bullish for the emerging market, which is Pakistan, India, China, Vietnam, Taiwan, Bangladesh. These markets are going to do really well in the next 1 year.
Okay, the next one is what is the good volume of daily trading for an equity stock in Tadawul, like below which we should not consider buying these stocks? Same question for KSE. This is the question basically.
Okay, this is a question relevant for someone who has a big portfolio. If you are buying, let's say, 200 million Saudi riyals worth of a small company, let's say Saudi Fisheries, right? So you cannot offload it in 1 day. But for individuals, you don't have that issue. Even if your portfolio size is 100,000, 200,000, you wouldn't have that issue. So ideally, if you still want to be sure, on Tadawul and on Argam, they will give you for free the last 3 months trading volume. Okay. They'll give you the 3 months trading value as well. You take the total value traded in 1 day. You take your portfolio and divide it by that to see how many days would it take to sell your portfolio. Okay. As simple as that. More often than not.
Hi, Asha,
Yeah.
Should I explain my question?
Yeah, sure.
Yeah, in fact, my question was that, in a stock exchange, the trading of shares takes place, right? So the active trading, the shares that show the active tradings in KSX, as per my knowledge, I believe that the stocks that have daily activity of around 1 million or more are worth. So my question is from that perspective.
Okay.
So below which volume I should not consider that stock worth for buying?
Honestly, Safi, it's very relative, because if you go 1 year back, the liquidity was very much limited in the market, so the volume patterns were different. Ideally, if you want to see every day, the stock exchange, they post the top 5 traded by value and by volume. Don't look at volume, look at the value. Okay. Look for 10 consecutive days. All the stocks that have appeared in that in 1 day or the other are very safe to buy. If you want to set a cutoff, take the market cap of the company and take their trading value in a day. Okay. And see any company that has liquidation of less than 5 days, it's good for you. Is that clear?
Okay. Yeah. So if we talk about a quantity, so should we say that in Tadawul, a stock which has trading of around 500,000 or more, it might be worth buying?
Do not look at the volume, because Darul Arkan shares is 10 riyals per share, right? So it's a number of shares will be high. Go to value. Now, if you go by value, let's say the market cap of my company is 100 million Saudi riyals, and my daily traded volume is 100 million Saudi riyal again. So it means in 1 day, I can buy and sell the entire market cap of the company in the market, right? If my daily traded value is 1 million riyals, it means it will take me 100 days to turn over the entire company. So that's a very illiquid company. You get my point?
Yeah, yeah. Okay,
Yeah.
fine,
So
fine.
you
Fair
compare the
enough.
market cap to the daily traded value, not volume.
Right, right. Thank you, Ashar.
No problem.
So anyone else who have question so far? I don't have further questions. Some of the question have been addressed during the questions of other participants. So I'm not taking those again. So you can raise your hand if you have any further question. Okay. Okay. Now I think we can conclude the session. So far, I'm not seeing any question. But by the way, Ashar has shown on the screen his contact detail for the any investment purpose. Personally, you can contact him and you can have a good advices from him. Um, Again, I'm referring to the recorded session. As I mentioned, recorded session is available, will be available on our YouTube page, which is Institute FA. The spelling is. So from there, you can revisit this session. Our next session will be held on 4th of June on global interest rates and FX rate, foreign exchange rates, and its movement over the period last 10 years, and how the market is impacting the interest rate and FX rates. We have a very good speaker for that. No, I can conclude from my side. It has been an honor to among such accomplished individual like Ashar. He was able to present his perspective before all of us in a very well articulated and comprehend manner. I believe everyone would have understand the basic concept of capital market investment, like especially he mentioned diversity, which I learned, and long-term investment. We should not be panic about short-term investment, and we should not shift our investment, something like that. And I would also like to thank all the participants who joined, who spoke and attend this amazing and knowledgeable session given by the Ashar, and they took out their time from their busy schedule. This means a lot from definitely, and first of all from Ashar side and as well as the participant side. So from my side, thank you all of you, and have a happy good evening. Jonathan, anything from your side?
No, Salman, I think you've wrapped up wonderfully. Thank you once again to our speaker this afternoon, this evening. Just by the volume of questions and the interaction from everybody who's attended, a very, very thorough session. So thank you. Salman, thank you for organising it and continuing to support the Institute locally. Your time and effort is valued as well. So thank you to you both, and thank you to everybody who's attended and participated this afternoon. I wish you well, keep safe, and we look forward to seeing many of you again on the 4th of June. Thank you all very much indeed.
Yeah, Ashar.
Thank you so much, guys. I mean, the Institute and all the panelists, I mean, I applaud your patience for sitting and listening to me for 1 year. Apologies if I offended anyone by any concept, or if I gave out any information unknowingly, but definitely I'm always available for anyone for help, and for the IFA as well. I'm always available for any guidance or any suggestions on how to improve things, because I think we develop ourselves on a daily basis, we learn on a daily basis. And if we arrange sessions like these, I think we can spread knowledge in a much more effective manner than how it used to be previously. Thank you so much, guys. It was a pleasure, and I would love to have all of you again.
Thank you. Thank you so much, everyone. Thank you, Ashar. Thank you. Bye. Bye all. Good evening.
Good evening.